Good evening, everybody, and welcome to Live Market Analysis for another week. It's a pleasure to be with you as we chat markets, what's going on, what might be about to go on as well. The disclaimer before we get started says that everything we're going to discuss is general in nature. It's just information, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of this general advice, you should consider it very carefully within the light of all of those things, and it is recommended you seek the advice of a financial professional before doing anything. If you do something, remember, you could lose money in the markets. Markets are risky. They go up, they go down. They might not go the way you thought they were going to go. And it's always you that's responsible for the stuff you do, not me. On that cheery note, get the requests rolling in. Your job is to ask those questions. You've got stocks you're trading, you've got stocks you're thinking about trading. It could be crypto, it could be commodities, it could be indices, what's going on in the world, interest rates, or it could be just stuff about trading itself. Mindset, money management, methodology. That's your job. My job is to answer the questions as best I possibly can and hopefully make some sense in the process. Let us head over to the Amy Broker screen first. And as your requests are rolling in, let me do the quick whip around the grounds. Obviously, no trading on Aussie markets today, but there will be trading tonight in the US. And hey, the trends still look pretty good. When was last Monday? If this is Friday 7, it would have been 1, 2, 3, 4, 5, probably about here. That's the last candle we looked at when we had the last update. And based upon that candle, no doubt I would have said everything's hunky-dory. Don't panic, we're all good. You don't get a big lower shadow like that unless there's plenty of demand in the system waiting to buy the dip. And that's what bull markets are all about, ladies and gentlemen. It's all about buy the dip. It's trying to get that capital applied because you've got lots of it. It's got to go in, and preferably you don't want to pay, over the top. You don't want to be getting in when everything's hot, all the chat rooms going crazy, GameStop, AMC going berserko. You want to wait till things pull back, and that's when you apply your cash. And that's what those shadows are. When we stop seeing those shadows, when those downward pointing shadows turn into big black candles, we're in trouble. Until then, we're okay. Obviously, some good candles there on Monday, Tuesday, Wednesday. Thursday was, neither here nor there. And maybe Friday wasn't such a surprise after Thursday's candle. Not a great candle on Friday. We've got an upper shadow. How do you get upper shadow? You get selling into the rallies. But put it into perspective. Put that selling into the rally on Friday, near the open, into the perspective of all the stuff that happened before it. So, look, we're fine. Don't panic. I'm happy to maintain a full risk position in terms of our portfolio weighting. Now, of course, I always cover my ass by saying, I don't know what's going to happen next. We could be at the beginning of the biggest bear market in history of all mankind. I don't know. I can't see the future. All I can see is right now, it looks like there's a bunch of demand hitting, not much supply. And if you disagree with me, please let me know what you're seeing that I'm not at this stage. But we're seeing white candles. We're not seeing black ones. If we see black ones, they tend to be relatively small. Upper shadows tend to be small. We're seeing high peaks and high troughs. We're seeing trends heading up, all that sort of stuff. And the moving average still continues to support the price action. That's important as well. So trends, price action, and candles. Get those right, and your life is going to be very easy indeed. Let us do the Russell 2000 now. I'm looking for it. I'm in the wrong. Watch this. That's why I can't find it. Head over here, head over here, head over here. Oh, okay. I always start with the Nasdaq. That's my risk on market. And then I look for red flags to potentially, dissuade me from my initial course of action, to punch holes in my bullish thesis. Now, this is punching a pretty decent hole. I don't know if you guys have been watching this one, but lower peaks and lower troughs, not higher peaks and higher troughs, selling into the rally, not buying the dips. In fact, when we dip, we do bounce a little bit, but then we dip some more. Trends are turning over here, aren't they? And they're not supporting the price action. We're not getting that cushioning, trampolining effect. We're sort of in there and we're delving in there, and now we're breaking beneath and closing beneath. Long-term trend is still up. So that is not a very pretty picture for the bull market. So it does temper my enthusiasm a little bit. I'm not going to change what I said before about full risk position, but we are potentially going to be a bit more conservative about adding any extra risk, or just be really aggressive on tightening stops and that sort of stuff. Because that is a bit of a red flag. The heart of corporate America there, it's telling you that, there's a little bit of something wrong. But you have to obviously have an index that you use as your benchmark, and the Nasdaq is mine, and that's still fine. Further red flags. Look, that's not ideal, is it? We want coordinated growth in share markets. That one's a bit better. No major problems there. Eurostoxx 50's fine. FTSE's okay. That we're seeing the cushioning there from that short-term uptrend ribbon, but we're not seeing. Oh, look, there are some decent black candles in here. But they're not overwhelming. This big shadow here is disturbing, isn't it? Along with all the supply in here, this shadow is confirming the supply that's at the top. I'm spending too long on these. The Spanish market is fine. So again, are there red flags to worry about? Let's head over to the Hang Seng. That doesn't look good either, does it? Look, little gap and run, low close, tried to rally, couldn't. These two candles after that candle are pretty darn bearish. That's not much better. Get a little bit of a rally, doesn't get much before we push that one out. Big supply push, not much here. Shadows into the zone, break of the zone, and we're going to come down here. And then what do we do here? I don't know. Is that a red flag? Let's keep going. Let's keep looking. Next, the Nikkei 225 in Japan there, that's fine. Nifty 50 in India is fine. Bit of volatility there. Don't know what's going on. Maybe something to do with the cricket. And in Shanghai, that fledgling bull market, unfortunately, is flaming out. So we don't have this ideal situation, I think, for risk on at this point in time. Which brings us to Australia. And that's annoying, isn't it? Because we would love this coordinated growth around the world to help us, because we need all the help we can bloody well get, because aren't we mediocre at the best of times? And we certainly have been mediocre for the last, 3 months, isn't it? But a pretty decent week last week. Look at that, white candles, a little dink through there into the short-term uptrend, now acting as dynamic demand. I haven't changed the colour here, but this will have to change to light green for obvious reasons. But look, ultimately it's still sideways, but it's the right side of sideways, isn't it? We're at the top of the range, not the bottom of the range. The price action is pretty good through here. As I said, the candles are excellent, and everything else is good in terms of the long-term uptrend. That ribbon is absolutely rock solid at this stage. I'm kind of not sure how it's going to happen based upon the other stuff we've seen. Not that they're really completely at odds, but yeah, how are we going to manufacture this new all-time high this week? And then on top of that, wouldn't it be great if we could print an 8? That'd be nice. Quick look through but everything looks possible there. It looks possible based upon the XJO in isolation. If you don't know what some of these things are, let me help you with that by doing this over here, which is frustrating. There we go. Now you can see what they are. Within the Aussie market, where should you be looking to apply your capital? Well, the best charts, of course. But if we do see the best charts, and we know the sector's looking pretty good, that gives us a bit of comfort. The discretionary sector, not terrible, bouncing off the dark green ribbon. Who would have thought it? Energy is terrible. That is by far and away the worst looking sector on the Australian market. So if you're looking for shorts potentially to balance out your position, maybe that's a place to look. Financials are exemplary. They look amazing. And there's a bunch of ETFs out there at the moment that are coming up in my scans. If you don't know where my scans are, I publish them every morning around about 9 o'clock Eastern Standard Time on the Market Index site. It says Chart Watch Scans, and then you've got my table of stocks I think are worth a look, and then you've got my short list of ones which, I would happily buy any of those. But having said that, go do your own research on where the levels are, because I don't have all the time in the world to pick out all the key levels you need to look out for. So just look out to the left there and say, okay, well, I can see why he picked that, but a little bit concerned about that big major peak there. This one doesn't have one. Maybe I'll go towards that one. Okay, so be sensible with your use of those. Financial sector looks amazing. Gold sector looks fine, looks good. Healthcare looks good. Technology looks good. That technology, again, that actually looked better than the other one. Materials, ho-hum at best. Resources, same as materials. Property looks good. So, staples looking better, actually, not bad. Trying to break through the ribbon there. We're going to talk about coals a little bit later on. Telecommunications trying to bounce as well. So really it's just resources and energy that are holding us back. Everything else looks good enough to facilitate this break to new highs this week. Fingers crossed. What else am I going to look at here? Let's look at the base metals over there in London. I'll put on the line chart for you, and we have been seeing a bit of a wobble. I think last time we did see the start of a wobble, and we're seeing it progress a little bit there on aluminium. Okay, a little bit of supply. Might be worth looking at the weekly chart on these to see if maybe there's something we can't see in the screen there that might be causing this. I don't think there is on that one. I think that's all. I mean, there's a little point of supply there, can act as a point of demand, but not exactly there. So I think that one's just doing its thing. Copper, we had. Let's go actually to the. Go back to auto here in candles, and we will see copper did hit a big point of a potential point of supply, and that supply has actually manifested there. Let's go back to aluminium because we'll get the actual proper place to draw our box now, because we will actually bring this down to here, and lo and behold, if we draw it correctly now to the actual trough, and then I've just included the top of that candle there, we see actually, okay, it does actually make sense that aluminium is having a bit of a moment around there. Iron ore, we will not have a picture of that until I take the percentage sign out of that, and then it appears that's flat at best. Let's go to nickel. On the weekly chart, geez, it happened very quickly, didn't it? It was there, and then now it's not. And that is, along with the Chinese markets, turning around a little bit disturbing. Let's go back to the weekly there, and just for interest, look at lead sideways turning down. Tin, that still looks like it's broken out to me. Zinc turning back down, they're all looking a bit lousy. Lithium looks terrible, haven't done tonight's update, I'll do that a little bit later on. Let's quickly head over to the, make sure there are no technical issues from you lot. There doesn't seem to be. Head over to the trading view and just finish off with a look at some of these commodities here. Silver had a terrible night on Friday night. I gave it the Ron Burgundy "that escalated quickly" award because when I took the snapshot on Fridays, many of you probably read it. It was a live candle. It was a white candle, lower shadow, looking great Friday afternoon our time, and then must have been literally after I hit publish. That wiped out completely. It's trying to bounce here, and it makes sense that it would try and bounce here. 29.29 is a key level. If it closes beneath there, with now 3 pushes in the bag, down from 32.76, major level 32.76, this is starting to look a bit done. I'm going to say if it closes below 29.29, certainly beneath 29, it's got some problems. And what could really seal the deal is the fact we're getting this white candle. If we do see the supply come in, that's going to create an upper shadow, and then it would be quite convincing that this run in silver is over. I know gold bugs, silver bugs are going to hate me for saying that, but hey, I don't make the candles. I just talk about them. And I hope you agree that that is a really bearish set of price action. That huge engulfing black candle on Friday, it kind of looked like it was about to get going. Silver certainly did, this one less so, but just this idea that maybe money was coming back in, and then they just got whacked. And they got whacked, and then there was no money. There was no more money out there for gold. It's trying to hold 23.08. That one looks really disturbing to me. It's a head and shoulders pattern as well, one of those classic sort of textbook patterns. But head and shoulders just means 3 times that there was excess supply that overwhelmed demand. And what order of magnitude, what could happen? Well, the dark green ribbons in both cases, but that's going to hurt maybe some local gold stocks as well. So anyway, like I said, I don't make the candles, and if it's at odds with your hopes and dreams, I apologise for that. Copper, a little bit similar. It's looking a little bit blow off to me. In fact, I'm pretty sure I said that. Go check the tapes and my market index chart watches. I'm pretty sure on that candle I came out and said, it's looking a bit blow off toppy here, guys and girls. So just be careful. And nothing after that has occurred to surprise me. Looking at the iron ore futures here, that looks bloody awful. I thought it looked pretty good here, but it just turned so quickly. And you could have read the candles pretty quickly to help you with it as well. But certainly that's, this is not great, but this is the death knell, and then this is the death knell of the death knell, and this is the third death knell, if that makes any sense. But that's cactus. Uranium's not looking good, very good either, unfortunately. And again, I know you're probably now throwing things at the screen, don't worry, only you and I can hear me. I'm not making anybody else bearish. I'm not causing anybody to sell. I'm not talking my own book or anything, but I'm just telling you what I see. Lower peaks, lower troughs. In the dark green zone, it needs to get out of there real quick. It got out of there quickly last time. V-shaped recoveries are the best recoveries. They're really the only recoveries. When you don't get the V and you get the bump along, that's bad news as well. I'm concerned about that. Roscoe wanted me to look at natural gas, and maybe we've got some positives here. This is starting to look half decent. We talked about it last week, and we said that it needs to close above that long-term downtrend ribbon. It's doing its best impersonation of a demand supply environment that wants to do that. 316, if I'm not mistaken, is the point that you'd want to see it close above. If you wanted to take a nibble here, I would not object, because it's got all the hallmarks, not quite yet of the turnaround play, but not far off it, but it's still, I think, in the category of aggressive. So if you wanted to take a little nibble here, and that's all it would be because it's aggressive, I don't mind. And then adding on a close above 316, I think it is, because that there is 315.9. So 316 close or better, then adding some. And you are doing that knowing full well you're potentially going to bump up against that. Okay, but hopefully by the time you get that, you've at least got stops to break even. This is an aggressive setup. Why is it an aggressive setup? Well, because the long-term downtrend is bloody awful. Okay, so it's for people who know what they're doing, and it's, to be fair, unless you can find a provider that's got mini contracts or even micro contracts, it's a pretty decent whack of dough that you're going to need to trade it anyway. But I do know some people are interested in that one. Looking at the rest of the energy complex, I don't think it's going to look very good from memory, and it's not, because I know crude oil is breaking down. I did report on that during the week as well. Nothing there looks very good, and in fact, even thermal coal broke down. So it all smacks of a global economy that is in the doldrums, ladies and gentlemen. And we did see the first interest rate cut from a G7 country, if you call Europe a country, you know what I mean, Western central bank during the week by 25 basis points from the ECB. So that's interesting. Hasn't had an impact here yet. Let's head over, we're talking about interest rates, so let's head over and wrap up our whip around the grounds with a look at what's going on with the US 10s. Oh, that hurts, doesn't it? And it actually makes sense that the Russell's coming off and a few other things are coming off with that big bounce in bloody rates on Friday, but it also is encouraging that the Nasdaq didn't flinch as well, so that helps. That's not a good sign. Just let me check the twos. Yeah, it's even bigger there. And the 10s for Aussie is a little bit of a bounce, and so it's frustrating that some things are looking so good when we get a move like that, but still a modest move. We're still, to be fair, when you look at it, we still big push down here, big push down here. Oh, that bloody dark green zone, isn't it? We don't want that to do its work here. Looking for further red flags. These are the regional banks in the US. They look pretty awful. The bigger banks, they're still fine. And then let's look at some of these Chinese property sectors. And I think we're pretty much done. And they are the problem. They are the source of the problem there, because it was the kind of everything else in China that led the rally. And then you can see property now starting to bring everything back, unfortunately. But while I'm here, because it's not hard to do, let's just head over to crypto and have a quick look at BTC USD. It looks fine. I don't think there's any major change I need to make to what I said last week, but some of all of that negativity we've just discussed is dragging somewhat. Okay, let's get over to the offline requests now and head back to, I've done a natural gas for you, Roscoe, so I don't need to stay here. I'm going to go to here and do Whitehaven coal also for Ross. That's his, two of his three. It was looking good, wasn't it? I mean, decent here, but you can see those upper shadows coming in, and why are those shadows there? And I know you know already that you've already imagined this, haven't you? So there's your supply zone, and no doubt that is having some sort of impact here. Oh, on the wrong screen. Thanks, everybody. There you go. You didn't miss much, really, did you? You just missed an unfortunate-looking Whitehaven coal chart there with that supply zone pretty evident and having an impact here. And this is the supply manifesting at that point. Since then, a decent bounce off here and a couple of candles that are not that exciting, unless that was a dividend, and I'm pretty sure it wasn't. Not a great look. Look, I think it was at most sort of a 1/3 or 2/3. Yeah, look, I can see how you could have got to 2/3. That candle there and that candle there. I can see how you could have got to 2/3. Not on that one. That's not a plus 1/3 candle because of the shadow, and neither is that one. It's not white enough and neither are these. So I can see how you could be at 2/3. So it's not an FRP, but I can see how we could be at 2/3. This is a bit concerning, and let me just say that I think you're starting to head the other way and say, well, look, for whatever reason, I liked Whitehaven. The technicals looked okay. I had a go at it, and if it closes beneath here, then I'm going to do the sensible thing, because I know how crappy Whitehaven coal can be too. I'm talking to the people who know Whitehaven coal, who love Whitehaven coal, but also know it, and that would be, I think, a prudent thing to do. I'd be, and it's not far to here, right? But I'll leave that up to you. Some people are not going to sell this no matter what I say, because they're true believers in the story. Might be Roscoe, I wonder. Let us go to Brendan, who's got car sales, or it used to be car sales, now it's just called Car Group. That is a much nicer chart. It was also, and this is a great sort of little segue, isn't it? It's also having to deal with its own supply zone. I might even draw it to here. So I've gone from the top of this one, that is a clear point of supply, I think we all agree, to the top of this one, that's a clear point of supply, I think we all agree. And let's draw that across. And we can compare and contrast how these two different companies, completely different, one is a technology-based business, one digs dirty black coal out of the ground, how they're dealing with their respective points of supply. And clearly one has manifested supply at that zone and one has not. And this is the one I think looks very, very good here. So if you are an FRP on this one, or 2/3 or whatever you are, I'm that way inclined. Would I add risk here? I don't see why not. I don't think it's too fussed about this point of supply, and that's a good sign to me. Remember, I don't have to wait for breakouts. I just need to get to the supply zone and see that the market doesn't care about it. And yeah, there's a little bit of an upper shadow there, but not enough, I think, to be too concerned about. So I'm actually for FRP there, and I don't mind if you wanted to go plus 1/3 actually on car sales. Let me just zoom that out, and that'll just give you some perspective as well. And if I go to the weekly chart, as we often do on the US stocks that look like this, to be fair, these technology plays, I think that makes it look even better, doesn't it? I mean, it actually looks quite wonderful on that weekly chart. So happy with that one for you, Brendan. And Coles, which is, sent me a couple of directions over the last couple of weeks. I'm pretty sure I ran it in my short trades here because it was breaking through the long-term downtrend ribbon, and then for whatever reason, I don't know, he saw the staples sector just literally turned around on a dime and went straight up. Can't tell the future. But the demand has come in, bit of volume here as well, supply removal. I think it's put a few shorts on the wrong side of the market. That's what we're seeing here. It is also having to deal with a pretty decent point of supply. It's literally starting to deal with that now. But as we saw on Friday's candle, didn't seem too fussed by it at all, did it? We're not seeing the manifestation of supply at that zone yet. But I think that's fine. I think this is a turnaround play. It's not a continuation play. It's not like car sales. I could go 1/3 to get some skin in the game on this one. And if you did happen to have it, then I've no objections with a full risk position at this stage. And adding to it if we can close above that point of supply. But that one looks fine. And look, your bug out is really not until down here. You're probably going to give it all of that leeway, to be fair. Candles notwithstanding. So if you saw some really bad candles, that might change things. So they're your two, Brendan, and I've done all the offline requests. I'm going to head over to your online requests now. Thanks, Sudesh, for being so patient. We've got Woolworths coming up, another one of those staple stocks. I think I'd go Coles over Woolworths. I don't know if you saw my tweet a couple of weeks back about the new e-tickets that Woolworths have, and Macquarie, was it Macquarie or Morgan Stanley? Well, I think it might have been Macquarie. And, it's so funny, these investment bankers, they must have all got together in their lunch break and went down to a Coles and Woolworths and had a look and took some photos, and it was in their research report. And they were saying that, Coles looks so much cheaper. The products in Coles, the groceries in Coles look cheaper because you can see the yellow tickets, whereas Woolworths, you can't see the bloody things anymore because they're electronic. You can see a little bit of yellow here and there. Anyway, whatever that means. But Coles looks better, is my point, from a technical perspective. And I couldn't buy this yet. It is nothing more than an aggressive you could go plus 1/6. It's not my style. I get, Carl, but it's Woolworths. It's got a great dividend yield. It's really reliable. It's in the staple sector. It tends to, bottom out at 30 and then top out at 40, mate. And, it's closer to 30 than 40. So I'm going to buy some. I don't mind whatever narrative makes you tick. That's your business. But at least have in the technicals some evidence that the market is starting to agree with your narrative. So, for example, can we at the very least see rising peaks and rising troughs? And we can through here. Then we actually saw there's going to be a little negative one in here. But that's okay because we're coming back now into rising peaks and rising troughs again. So I don't know how good you are about doing your major points of supply, but what we actually have here is something pretty neat, major points of demand. So that's it's a point of demand, but it's also a major point of demand. And the reason for that is we have the medium-term downtrend on its left-hand side. Okay, I'm stylising a little bit. So you've got it's the bottom of a medium-term downtrend and a medium-term uptrend. Whereas just a simple one, let me just do one that's quite simple. So, for example, that one there is the bottom of a short-term downtrend and a short-term uptrend. Okay, so this is just a normal point of demand, but some of them get promoted because they're the bottoms of actual the peaks and troughs themselves, if you get what I mean. So this one here actually has a little medium-term downtrend here and a medium-term uptrend here. So this would actually it's a point of demand, but it get promoted to a major point of demand. And the fact that we've got two rising major points of demand is a tick. Okay, so is it fitting? Is there at least some demand in there to match up with your narrative, especially given that this bleeding great big thing, the elephant in the room, okay? So I think that's a positive. The candles are pretty good. The last price action is pretty good. We're closing above the short-term uptrend ribbon. The short-term uptrend ribbon seems to be supporting. Maybe there's a bit of supply removal. This it's good to see a major point of demand on a spike in volume. That's an exhaustion of shorts, a short covering, bargain hunting, big money coming in. So that's okay. So, and there's a little push up the second one as well. So there's enough here if your narrative is, I want to buy Woolworths, to support that. But I suggest starting small because this could easily do this and cactus from there, as in trading $25. Okay, so be sensible about it. It's not one for me, but I'm trying to give you other strings to your bow if you want to trade in a different way. Okay, not everybody wants to trade like me. Some people like to get bargains. Okay, don't we all love a bargain? Sometimes, you're talking about Coles and Woolworths. You go to Woolworths, and pineapples are $1 each. That's a bargain, right? Buy pineapples, go make pina coladas, because Coles stock or Woolworths stock is at $30 when it was at $40. That doesn't mean it's a bargain. It's not on sale. It's not. It doesn't. Pineapples will go back up in price next week. Woolworths and Coles won't necessarily do that. Something that probably can go up in price for you, Sudesh, is the next one is CSL. I'm a little bit skeptical about this one. Every time this starts to look good, Sudesh, what happens? Go and type in, Sudesh. Let me know what happens every time CSL looks good. Just remind me and just remind yourself, okay? I don't think we need to say anything else about CSL. It's starting to look good. Sudesh wrote down. One word down. So there you go, Sudesh. I think if it makes you feel any better, Sudesh, it's starting to look good. Over to Perry. ASX stocks, PME. This one's permanently looking good. This is perma good on PME. And if you didn't know anything about technical analysis, I think the colours are the first things that strike you. And when we have, the short-term trend ribbons, didn't quite work there, but eventually we got round to it. But short-term trend ribbon supporting price, supporting price, hunky-dory. Long-term trend ribbon supporting price, all hunky-dory. Price action's a bit overlapping, but not terribly so. And I'm just giving you the criticisms first, Perry. The number of black candles is disturbing. But if I delete all of those, it's still fine. It's still going up, and I would happily own this. FRP, no questions asked, and plus 130. If you don't have it, I think the overwhelming evidence is towards excess demand, not excess supply, and therefore I can't see any reason why you wouldn't own some. Why are those black candles there, Perry? Because you have, I was going to use a very, very bad word there, and it would had, lots of F's and things in it. But let's call them, I think they're not very intelligent people. I was going to use effing morons. But these effing morons have sell recommendations on PE, Perry, and they've got targets at like $30 a share. And there's at least one of them. And these effing morons, I think if now, and some people say, Carl, you're being really unfair on these effing morons. But I think if you are maintaining a thesis, I think it's 34.50. If you're maintaining a thesis that this stock, like how belligerent and stupid do you need to be to say that the stock is worth that much and stick with it? Come on, guys. So that's the sort of mentality of, I think, maybe some of the people that create those black candles. And overwhelmingly, everybody else has price targets at 130. I've seen 150, whatever, right? Hey, but who cares? None of them could be right and all of them could be wrong. It just doesn't matter. At the end of the day, all that matters is supply and demand, which is the perfect segue into this one, which is Perry's second one, which is all demand and a little bit of supply. A little bit of supply, that's the supply there and that's the supply there. But the rest of it, let's literally mark down the supply candles. Count them. If that helps you, count the supplies versus the demands. And this is just overwhelmingly demand side. And there's nothing in here I don't like, which means there's everything I do like. FRP, this has been in my scans. This one has been in my scans pretty much every day for the last couple of weeks. And plus 1/3 also there. And I just wonder what some of these, market index people that don't know me are reading these things, and I put this in every day, and they're just thinking, how does this guy live with himself, calling something that's gone up that much a buy? And then I would just love to see their faces. The next morning they come in, there's another white candle there, scratching their heads going, but I thought it was too expensive. NAB, I think also looks very good. That's been in my scans this week as well. If you haven't read the book, How I Made $2 Million in the Stock Market by Nicholas Darvis, it's an absolute must read. Give me a thumbs up if you have read it. I think everybody can see the thumbs up. I think so. And that way everybody can see. If you haven't read it, then people, there you go. You can see why you should read it, because everybody who I've recommended read it has read it. And so Nicholas Darvis, obviously a ballroom dancer in the 1960s, travelled the world and did everything the wrong way. His story was my story. And then he started to get into technical analysis by pure chance and accident, that he realised the way he was trading was actually technical analysis, and he created this technical analysis method called Darvis boxes, effectively. Or not that he created it, but then we kind of attributed this style of trading to him much later. And long story short, it's breaking through the Darvis box there, which would make you buy it. And I've no objections at all to doing exactly that. So FRP for me, and plus 1/3, no questions asked on that one at all. Thank you, Perry. I'll do your US ones when we're heading back up the list. Adonis has got SXE, which is still looking good. I thought I saw a couple of black candles on this. I haven't put it in for a couple of days, Adonis. So I'm guessing you've probably noticed that maybe that day, and that day I didn't put it in. But I'm guessing I did put it on that day and that day. Next white candle is what I would say here. I'm happy to hold it. I'm still an FRP. And next white candle, high close is what we say, plus 1/3, because everything else is there. So we've got obviously trends. Price action is compressing. That's not ideal. Why is it compressing there? It's not because of any historical points of supply, because there are none. It just is. It's not a round number. It just is. But for whatever reason, somebody is thinking, well, that's fair value, and that's how fundamental analysts, value investors work. They go, well, I bought it, and they are clever. Don't get me wrong. They were very, very clever, because some of them got in, they saw the value, and generally, if we look at where it might have stagnated, that might give us a hint as well. So if it's sort of stagnated around here, so let's call that 70 cents, you might see it then, stop around 140. Kind of didn't. I'm not trying to prove my theory. I'm just offering ideas, and the market will either prove them right or prove them wrong. So we kind of stopped around here around about 85 to 90 cents, to be fair, and we're roughly double that now. So what I'm trying to get across here is that the people who bought in here right? And were there lots of people that bought in there? Did it chop there? Did it change there? Did it have time for people to accumulate in there? Yes, they did. And now they're sitting on double their money, okay? So some of them will want to sell, not all of them, but some of them will want to take profit because their brains cannot cope with this idea of possibly making more than double their money. Because you know what we're like, hey, you double your money, you want to get out, right? But that doesn't mean that other people don't see even more value in it, okay? And they will soak up those shares. Maybe they will. And that's what we're looking for now. We're looking for evidence that others are still seeing the value. They're soaking up those shares. They're not worried about that selling. And so far it's fine. But let me give you some points where it won't be fine anymore, because I don't think we're fine if we close beneath there, okay? So we've got a trough here. We should have demand here. The point of demand in the past, it should be a point of demand in the future. Point of demand, point of demand. You've got 2 points of demand. You've got a nice big white candle here. How do you get those white candles? You get them because you've got lots of demand. So here equals lots of demand, exclamation mark. Okay, why are they demanding? I don't bloody know. Who cares? They're demanding for whatever reason that they want to demand. Now, I ask you to consider if we are trading down here, potentially with a big black candle. So let's imagine it hasn't happened yet, but let's hope it doesn't. And let's hope it doesn't happen. But let's hypothesize. And that's, I think I've hit the arrow, not the candle. You know what I'm trying to do. Let's go here. So let's say we got that one. And what does it mean about this demand? All this lots of demand here. So is it still here? If we're closing down here, is lots of demand still here? Okay. And I put to you that if we're down there with a big black candle, that demand's gone, and that's a concern. That should really worry you. And that's why we have these points where we look to manage our risk, and that's all it is. So beneath there, no doubt about it, minus 1/3, depending on, I mean, if you've got a black candle like that, that in itself would be minus 1/3 in addition to the close beneath those points of demand, and I would let you decide whether you wanted to go the final third or just keep a third on the basis that the trend is still a monster and it may reinstate itself. But happy holder until then. But obviously we go into these things with a plan on how to get out if we need to. Let us go now to. I always say let us now. Anyway, it's because I'm trying to find my spot, so I need to say something. DXB Adonis, I've done that one already for Perry. Adonis has got NAB, great minds thinking alike. Also looks good, he says, on the breakout of the Darvis box. Well done, Adonis. That was typed in before I had that chat about Darvis. Absolute legend, well done. And he said he'll zip it now and listen. Mate, you don't need to listen. You can take this webinar. James has got EBR, which it looks good there, but we should always zoom out before we do the analysis of the next company. So we're looking at things on a like-for-like basis. Because otherwise, that's the most amazing trend. And we haven't seen all the other stuff that we need to see. For example, the bleeding great big point of supply. I mean, this is a monster of supply up here. It was going exponential. Look at the volume. Everybody was just cock-a-hoop about it. They love this thing. They're talking about it. It's all over the chat rooms. It's going to be the next big thing. It's going to $1 zillion. And a bunch of them got in. And you know how, not you, other traders, not you, you don't do this anymore, but other traders, they don't get out, right, after they start to lose money or they didn't get the top. That's the worst thing. I didn't get the top. I can't sell now. I have to wait until it goes back up to the top so I can get the top and feel good about myself and stroke my ego. I'm not saying that's you because you don't do that anymore. But the people in here, like especially around here, they're going, okay, well, just wait for it to go back up to the top. And it doesn't go up to the top, does it? It keeps going down. Well, I can't get out now. Can I? All right. Okay. All this time, what are they thinking? What's the only thing on their mind? Even now that's going back up. All right, they just wanted to get in here so they could undo that mistake. And was there a bunch of them that undid the mistake? Probably. So this is probably going to be an almighty point of supply, but we won't know till we get there. And that's the fickle thing about points of supply. You really don't know till you get there. We expect it to be something, and the candles will tell us. And much like we saw in Whitehaven, the first case study we did today, there was supply there. And then we looked at car sales, and there wasn't supply there. Will there be supply in EBR Systems? I don't know, because I can't tell the future. But what I will know is when I see the candles, I'll be able to tell you, well, there is. But it looks fine until that, because everything else, it checks out here, okay? And really, that's all we need to concern ourselves with. So I think if this is very easy now. If you had it, no worries. FRP, everything's going gangbusters. It doesn't look like it's too concerned about the supply at this point in time. Would I add a third? I was about to type it out of habit. The FRP plus 1/3. I normally type it, but I'm not sure if I'm going to type that plus 1/3 here because of our proximity to that big point of supply. What's my reward to risk? And if you wanted to add a little bit, that's fine too. Because remember, I say this a lot. I say, you kind of can't really screw the system up unless you take too much risk. If you see something that looks like it's got excess demand and lots of it, go buy it. But if it's banging up against a big point of supply, maybe don't buy as much. If it then prints white candles in that point of supply, then buy some more. Sometimes you see something that's nice, you just want to scratch the itch and have some, and that's okay. You can do that. Brokerage isn't so astronomical anymore. You can just get a few of something and just see how you go, because it helps with your mental health as well, because the last thing you want to do is not buy it and then see it go up and then kick yourself for doing it. But if you do buy it and it goes down, well, look, I only bought a few. And I went into it eyes wide open. I knew what could happen. That's why I bought a few. I don't feel so bad. They're two very different mental states, which are at odds with the way most traders do things. I can't miss out. FOMO, I can't miss out. I've got to have some. Okay, and I'm robotic. I've only got one way of buying, and that's to buy X amount. We don't have to do it that way. You can't go wrong if you get the money management right. But please make sure there's some demand. Well, even Woolworths, like I said, Woolworths, was there demand there? Yes, there was. Do I think it's the best trade? No, I don't. But it doesn't mean you shouldn't buy some. Get a few, scratch that itch, and if it goes better, buy some more. Whose methodology was that? That's the test. Whose methodology was that? He called it his exploratory trades. I think he might have used a different word, but I'm not far away from it. So type it in. Whose methodology was that? To just get some skin in the game, see how it goes. If it went right, then add to it and keep adding to that winning position. Do you know who I've adopted that methodology from? I'll give you a hint. Not much of what I do is mine. A lot of it is stolen from other great traders. And improved upon, hopefully. Let's go to IPW. That one was for James. This one's also for James. And I don't think that's IPW. No, not happening there. Let me double check. Definitely. On the Nasdaq. Okay, we'll do that one when we get to the US stocks. We're going to Repalm now. It's got ANF, which is also in the US, but it's Abercrombie Fitch. Amber's got Ethereum and Floki. Yeah, we can do that one. Now I'll do it now, because if I don't do it now, I'm going to forget. So let's head over here, and we want to head to Ethereum and Floki, which I'm not mistaken, Floki is the name of the Shiba Inu dog, from which Dogecoin was originated. I think the dog's name was Floki. Dumb stuff like that, but it's crypto. It's okay. Ethereum doesn't look as good as Bitcoin, but it still looks okay, and that's probably about as far as I would go. Okay, we're seeing supply in and around this zone. It is manifesting itself. It's reinforcing itself. Demand is struggling to keep up with that supply, but we're still holding short-term uptrend ribbon. As long as we do, I think we're okay. A little bit of a shadow down there. That's where demand started to come in. Was it a lot of demand? No, only a little bit. But there was quite a bit of demand here. So you can see this shadow is kind of manifesting the demand that was here and people buying based upon that. But if we close beneath, certainly both of those shadows beneath there, it's going to be beneath the light green zone. And I think we've got some problems in on Ethereum, and we could come back into the dark green zone if that's the case. We want to see white candles print here really quickly to make us feel better about it. FLOKI is not on that list, so let me go find FLOKI. And Floki Inu, that's not the one. Floki versus USDT is probably a good place to go. Looks half decent. Looks better than Ethereum in many ways because we have a stronger uptrend. But that big black candle's a little bit disturbing. Lower shadow's good. Lower shadow today is good. Look, it's okay. This big upper shadow and this big black candle smacks of here we're exploring, looking for supply. We found a bit. Then we take those out, and then we just found a bit. We found a bit of supply, and pretty similar, I think, as long as we stay above, say, 22,704. There's 3 zeros in front of that 22. We're probably okay. Beneath that, I think we're starting to roll again. But there's plenty to like about this move up to this point. Let us head back to Amy Broker, and we're going to do from Matthew. Good day, Carl. Good day, Matthew. Question, please. I feel like I might need a refresher on stop placement. First, third, exit, especially with relation to how you go in a little bit under the general crowd or rounded number. Are you able to throw in a few examples if there's the right opportunity from people's requests? Thanks. I'll continue to do that. I'll continue to keep that in mind. But we do this regularly. So I'm going to go to the next one, and then I'll make a special point to bring that in. So I won't necessarily go to one now for you, Matthew, but I will incorporate that. And that is a good question. Let us go to 360. Perfect. I could not have asked. Perfect. After Matthew's question. Okay. This is exactly where I wanted to be. Like, if I had to think of the perfect case study. Let's pretend that's today, right? There's only one thing I want to do on that day is FRP plus 1/3, and the same on, for example, this day here and this day here, okay? But Carl, you would have been buying at the top. Yeah, I would have been buying at the top, absolutely. Happily, every day of the week, buying at the top. But there's got to be, the top has to come, right? The top will eventually occur, and you could be the person that buys in the day before it. That doesn't mean my methodology doesn't work, because my methodology would have bought in about 100 other places earlier on as well, okay? Somebody's got to buy the top. Somebody gets there late, somebody gets there early. So there are plenty of places, even that candle, to buy, right? I mean, here, I could keep going. I won't. So, yes, I would have been buying the day before. So let's say, in this case study, let's get rid of all those, and let's put that back and say, literally, this is the day I bought. I went plus 1/3 on that day, okay? Where's my stop going to go? And it's up to, it's a great big pause, being very careful about what I say. Look, I don't think it's a bad thing to have a hard stop in the system. So a hard stop is you literally go on your platform, you type in the number that you want your broker to take you out at, you hit enter, and that stop is active, it's live in the system. Because it's in the system, and it will happen if the price gets to stop loss, we call that a hard stop. A soft stop is not in the system, which, to be fair, is kind of useless, right? It doesn't exist. It only exists in your brain, which is dangerous. The good thing about a hard stop is if it gets there, the broker's going to take you out, right? And there's a benefit in that. It's saving you from yourself. So I think if you're not very good with discipline, and you know if that's you, hard stops are good because they take a bit of you out of the equation. I would say if you're good at discipline, I don't like to use hard stops, okay? I prefer to use soft stops. I prefer to just know where I want to get out, and then I wait for the price action when it gets there. Because what I don't want to be in a situation is if, I probably want to go back to one before, right? And let's just, again, this is all hypothetical. So let's say for whatever reason, we got in on this day, right? And you'll understand why I'm changing it in a second. So let's say that candle there, because for me, that's a plus 1/3 candle. Hypothetically, this is not necessarily the model, but let's say, we got in on that candle and we said, okay, I'm going to put my stop loss underneath the shadow, because the shadow is where there was demand, okay? And if you're using a hard stop, well, let's call this candle A over here, you got stopped out on that day, right? It triggered that stop. But if you're using a soft stop, I ask you, would you have got out in candle A? You don't need to type it in, so I know the answer is no way. Why would you ever get out in candle A? Candle A is the most amazing demand side signal. And this is the push and pull, right? If you, and again, these are all bad examples, but if you set your stop loss under there, for example, you might be glad that you had a hard stop in that case, right? I'm really fishing here, but hopefully you can see at least why you might want to use a soft stop over a hard stop, because points of demand can get tickled, stops can get run, and then bang, by the end of the day, it's trading way back above where, your stop loss was. Plus, I like to see a close beneath a point of demand to tell me that demand is gone, because the whole point about that point of demand is that demand might be there. And if I'm not waiting for the close beneath that point of demand, how do I know that demand hasn't taken some time to manifest itself? So that's for me. Now that's the method. That's the how. The why is stuff we do all the time. So let us say we got in at 1/3 there. Okay. Where would I set my stop loss? Well, I just told you I wouldn't. Where would I set a soft stop loss? And this is the stuff we do all the time. I draw arrows on the screen. I want you to draw arrows on your charts as well, and trading view where it is, and print them out and stick them on your wall so you know where your soft stops are. So for me, I see this bleeding great big point of demand here, huge white candle, followed up by another huge white candle. I know there's a great deal of demand there. And the whole point about stop losses is to put them beneath big areas of demand, because should the price get back there, in theory, that demand would come back in and save your ass. And if it doesn't, then you want to be out anyway. All right. So let's say I got in here, and let's go back and call that point A again, different point A, and the stop loss. Let's go SL for point A, point A, for example. And let's say the next time I got in another third here was on that candle there, which I think is totally valid. Well, maybe now my stop loss. Well, let's do it here, but they're going to move, isn't it? I'm not going to leave my A stop. Let's say that's my B entry, and that's my B stop. I'm not going to leave the A one down here, am I? I'm going to move them both up. Okay, so this becomes now my stop loss for A and B, for example. Okay, and let's say here's my final third. I got in literally at the top on that day. And, didn't know the future. Bad luck for me. Okay, so let's call this point C. And if you did that, that might be you. I don't think you did anything wrong. I think you did everything right. Just the market just didn't turn out the way, or in the direction of your trade. I'm just want to put it where you can see it. So that's C. Now how do we get out? So if I'm at C, where's my point of demand now, right? So let's go up to here, right? I'm hiding underneath this trough now. So now this is my stop loss for point A, point B, and point C, right? But it's still a soft stop. There's no hard stop. Unless you have no discipline, then it's a hard stop. And I see this candle. How do I feel about that candle? Well, you know what I'm going to say about that candle. I'm going to say, that's not a great candle. That's a bit disturbing, but I don't think it's enough to warrant managing my risk just yet. It is a bloody awful candle. If it had occurred at a round number, for example, $20, that would change things. I would go that candle, $20, 2/3, 1/3 for the $20, and then 1/3 for the candle. That's how strongly I feel about round numbers. But there's really nothing about 17. If it occurred at a major point of supply from the past, I would be of that thinking. But it didn't. This is all blue sky from here. So that candle in and of itself isn't enough for me to act at this stage. And you might say, hey, Carl, but that was the top, mate. That's where you should have got out. Everything. A, B, C, the whole lot, mate. And I'll say, oh, shit, I don't know what's going to happen next. So let's go to the next candle. I wish I could do this one at a time, but it does the whole lot. Maybe I can. Maybe if I do my line. That's what makes it go one at a time. Now, that's different, isn't it? That's starting to get a bit more serious. The chart looks so darn good. It should be just overwhelming demand. There shouldn't be any doubts. There shouldn't be any supply. Why have I got two big black candles, upper shadow as well to boot? If I blend those together, I've taken out 1, 2, 3, nearly 4 big demand side candles. That's enough to scare me. That's enough to say something isn't going right anymore. I'm not going to dump all my trade. I'm going to do this. I'm going to just go a third, just for safety's sake. If I get a big white candle tomorrow, I'm going to kick myself for doing this. But I still got 2/3, don't I? But I don't like what that's telling me. We go to here, and that's not good either. we didn't get a rally at the light green zone. It should be rallying. Is that candle enough to get me out? No, I don't think it is. It's not great, but it's not a big black candle again, is it? At least there's some sort of inkling of demand coming back in, even if it's very weak. Oh, okay. Well, that's more encouraging. It could be much better because look how tiny it is in relation to those two big black candles. But I don't think I need to do anything yet. You're still going, Carl, you should be getting out now because I know what's going to happen next. Okay, well, I didn't know what was going to happen next. That's disturbing. And it's making me feel more confident about applying this, okay? SL, A, B, and C, okay? They're all there. So when we get to, it's pretty close, and that's why, so hard stop, you're out, right? And I'm okay, I'm cool with that too. If you're a person that doesn't have discipline, you're out of this trade. And to be fair, you got in, one here, you got in one here. I don't think you've made money. In fact, you've lost, but I don't think it's a horrific loss, is it, to be fair? But you're all out. Okay, and hard stop, people are now kicking themselves. I'm starting to see it. Now I'm starting to get really concerned. Okay, because that candle in relation to these two candles is really disturbing. It's almost enough in and of itself for me to do another third. That's quite aggressive. If you did it, I wouldn't complain. But the fact it just closed off at lows might just make me wait one more candle. I don't think I can wait anymore. I think I'm going to go a third just as a precautionary measure. If you didn't, you wanted to wait one more candle for a black one, that's fine. But if you also did this, I wouldn't complain either, okay? So now we're kind of close to breaking even on that one. We're probably making a little bit of money on that one, okay? Overall on this trade. We're definitely losing on the last one in. And that's it. That's it. We're done. There's no arguments now. There's no confusion. We're all done. We're all dusted. We definitely took a loss in this trade. But that's if you started getting in as late as here. If you started getting in all the way here, this is nothing but profit. It's nothing but cream up here, isn't it? But you had an absolute clear-cut roadmap on what to do. I feel there can be no confusion, but I've been doing this forever, okay? And none of this confuses me. So if it confuses you, then I totally accept and respect that as well. But that's why we do these case studies to try and understand what the hell is going on. Now that's the perfect case study, and they're not always as clear cut as that, Matthew. I mean, I could not have, whoever gave me 360 after your question is a bloody genius. All right, they're not always as clear cut as that. Let us go. Thank you, James. Good timing. Sudesh acknowledging that CSL goes down after it looks good. Haraju wants LTP. How are we going for time? That's it. Please don't put any more in because I won't do them. I know where we're going to stop. And then we'll head back up the list on the US stocks. Rupam. No, not Rupam. You want US stock. Haraju was LTP. This doesn't ring a bell. Okay, well, looks pretty good there. I can see why it's probably not coming up on my scans. I'm looking for long-term trends to be doing certain things. There's no long-term trend, so that's probably why it's just too new, I think, for me to find it. But everything else, if you just look at short-term trends, looks amazing. That, obviously, Rupam is problematic. You've got the $1, hopefully you can see there. You've got an almighty supply side candle. Saved a little bit by this, but not enough. And I don't think you're asking me this to buy it. I think maybe Rupam, you're probably already on it, which is good. I'm glad for you, of course. But I think you're going minus 1/3 on the basis that it's a round number. I think you're going minus 1/3 on the basis that that candle is disturbing. And I can't see any reason why you wouldn't continue with a plus 1/3 just to see. You're probably making a good whack of profit on this. So just keeping that 1/3 just to see what is left in it. But that, that's a little bit optional. Leave that up to you. Obviously, we're not buying it up here with that big candle. NTU is similar in that it's obviously going gangbusters. It is also showing a bit of a supply blowout there at a round number for like 5 cents. Don't discount the significance of 5 cents. You go, Carl, why is 5 cents? Well, if you like to trade little stocks like 2 cents and 3 cents, 5 cents has got a little bit of an aura about it. And then the next one would be 10. We've obviously got a big point of supply here that we are tickling at this point in time, and that could further lead you to maybe manage a little bit of risk. Let me zoom out and see what else is above that. It's an important level. If we can get above here, there's actually not a lot to concern us in terms of major points of supply until we get over here. And I wonder what's that, 6 and a bit. You stay there. There we go. And Yeah, but I wouldn't be buying it here. I think if you had it, you could hold it. If you were really nervous, and I'm going to put it in the really nervous camp, minus 1/3. This is the 5 cents and a bit of the shadow there, but only if you're really nervous. Otherwise, look, I'm happy to go FRP on this one, but I'm not going to buy any more here, just because I'm a bit concerned about that supply zone, mainly because I can see supply manifesting itself there. Otherwise, it's the start. Looks like the start of what could be a good trend, but we don't know yet. SUM, this one looks better because it is not interacting with any major supply zones from the past. I don't think so. No, that's all the price action we have. I love it actually when these new ones start to do this because they don't have any hang-ups. There's no mental baggage around certain levels. 30 cents is not a major round number for me. You might look at something like 50 or $1. But not 30. And you've got a big white candle there on Friday and plenty of volume. So this one is a goer for me. I not only would I be FRP here, and this is why I put it in my short list a few times during the week, plus 1/3, happy on that one. And again, a nice couple of case studies to put side by side, because you can kind of compare and contrast them and see why I might say one thing about one and a different thing about another. Adonis is telling me where his stop is on 360 at 13.90. Well, we all know where Adonis's stop is now, so we can go and hunt that one down and ruthlessly, mercilessly take it out of the market, which he might have been. I don't know, Adonis. Even it's gone below 13.98. So maybe, what does that mean? You stopped out. Assuming I got in. Okay. He's telling me where hypothetically it would have been. Okay, maybe to do with some of these levels. Okay, he's not actually telling me where his actual stop loss is. That's the bottom of the list. I'm heading back up the list now. So we're only doing US stocks. So that takes me over to the trading view screen. And we are going to go to Rapalm's request, which is CRWD. Crowdstrike Holdings. I'm pretty sure we've looked at this in the recent past, not immediate past, because a few black candles around the place, but I think we go check the tape somewhere through here when the trend was nice. And it's a great example of a demand side phase, equilibrium phase, and now we're kind of pushing back into potential demand side. We've got some work to do, and it should be clear as day where the work is, why the work is, what's happening with the work. I mean, the work is here, this big point of supply, big black candle. You saw what happened afterwards, and then this move as well, surprise, surprise, at the point of supply. When we get things that happen for no good reason at places that don't make any sense, I'm more concerned. When I get a supply side push like that, as bad as it looks, but it comes from a logical place, I'm less concerned about it. Having said that, there's too many black candles here for me to get too really excited about it. I can see why you might want to add some. I can see that it's not showing a lot of concern at the point of supplies. I mean, look at the last 2 out of 3 candles. I mean, this is a monster. Little gap run, high close, lower shadow, push into the short-term trend ribbon, bounce off. Lots of demand here, lots of demand here. It's not showing a lot of trepidation because, I mean, don't forget, this is the tip. We've tested this supply once. We've taken a lot of that supply out of the market, and we're kind of second time it's a bit weaker. I'm a little bit 50-50. I think if you show me that, if I get to the next chart and I don't see any supply here, I see just a much easier run at it, I'd go for that one over this one. But I can see why you might want to do this one. In isolation, I can see why. And what makes it acceptable is the fact that we're not manifesting supply on this run at this point, even though we're pretty close to it. And I'm repeating myself, but I get to the but, and this is the best way to explain this. You know how much I love white candles? It explains why I get a little nervous when I see black ones. Okay, so let me try and find a setup where I'm not seeing any black candles. In and of itself, it's fine. I'm going to go, it's like a 7 out of 10, maybe a 7.5. It's good. But let me try and find something without those black candles. Rapalm, if you've got it, then I think it's an FRP. I think you go for you can maintain the risk you've got on it. And it's a bit of a subtlety, isn't it? Where maybe I wouldn't add to it, but if I had it, well, I'm in it. I'm happy to hold it, but maybe I'm not adding to this one just yet. Now, where could I add to it? I think given the magnitude of those two supply points. Just get this another close. Give me one more close to them, or preferably a breakout that I could go. But I think it's a very strong setup. Let us go to NVIDIA, which is down 90%. It might well be down 90%, NVDA. And if that's the case, it is down 90%. It was $1,200. If you looked at it on Friday, it was $1,200, and now it's $120. So it feels like it's down 90%, but it's not, of course, because we've had a 10-for-1 split. Matthew knows that. I'm sure he does. trying to catch me out. And that just means there's 10 times as many shares, so the price gets divided by 10, and the market capitalisation hasn't changed. The total value of the company is identical, but we've got 10 times as more shares for 1/10 of the price, and nothing changes really in the technicals. The technical analysis is still the same. There is a bit of a supply side candle there, but I think it's moderate in relation to all the demand that has come before it. So I know many of you are on this one, and I'm still FRP. I don't think I'm going to add any more at this stage. I don't think we need to. I think just see how you go with what you got, and just enjoy the fact that you're on it, because a lot of people didn't get on it because they thought it had gone up too much. Let's go to next one here. ANF for Rapam. ANF. Abercrombie and Fitch. That's the clothing company over there. Oh, that's a big white candle. There you go. So this is. I'm glad Rapam, you've asked me CRWD, Crowdstrike, and then this one, because I have less of an issue with buying into this one, because I'm seeing big white candles and I'm not seeing those black ones. So if I had it full risk position, I could add a third here. I don't see why not. It's a little bit of a ways away from the light green zone. Again, it's close to 200. I mean, this is a little bit problematic. The fact that we've had the little bit of supply coming at 200, but yeah, I mean, we've had a test. We've had a first test of 200, so it's not like it's a big surprise anymore. But let me see if there's something better. There might be something that just has a couple of nicer candles here. But again, it's people are asking me these. I'm guessing because they've got some sort of interest in them, or they like the story, or whatever it is. So I will tell you straight up when I find the one that I love more than anything else. Happy with that one. But is it the one that I love more than anything else? I don't think I found it yet today. Let's keep looking then, because I'm sure it'll be here in your list, in your request. Might be Rapam's next one. APP. Applovin. We have looked at this before, haven't we? Okay, well, there you go. FRP plus 1/3. I'm not sure where it was. Maybe on this little candle here. I think we're okay. I still think it'll get to 100, but we are seeing some supply come into the system. We talked about stop losses, hard stops, soft stops, and these two points of demand here, these shadows, I think are important. I'd be managing my risk beneath those. And if I had another black candle before then, I might do another third. But again, happy to go FRP, acknowledging that it's not ideal, the candles, but the candles are moderate in relation to everything else that we can see on the screen. So still happy to go FRP, even if that's famous last words. Let's go to James EBR, which I'm guessing is that one. Not going to pronounce that one. It's a Brazilian stock. Much like many of the energy stocks at the moment, I'm hoping I've got the right one. EBR there. I can't think it could be on the ASX. Okay, well, it's not that one. Well, this is a good one to do, just from the point of view that it looks like so many energy stocks out there, and it looks like a great short, doesn't it? So many of these energy stocks look like that. So that would be a short for me. But no, James has actually asked me about EBR on the ASX, so that's why. Not that one, but he did ask me about this one, IPW, iPower, which I'm guessing is heading the other way. Again, point of supply, big black candles. I get this one's nice and white, and it is. Look, I could do it, but it would be a small one. It would be like a sixth. I don't think I'd go a third on this one. If I had it, I could hold what I have and see where I go with it. I'd be concerned if I closed beneath $2, let's call it. But on the basis that everything else is interesting enough, I could add some risk. But again, 1/9. I didn't mean to do 1/9. Let's leave it at a 1/9, just for shits and giggles. The concept is here. I'm not adding a third on this one. I'm adding a bit less. Let's go to the next one here, which I'm pretty sure is Robinhood, which is hopefully enjoying some of the craze around GameStop, and it seems to be. You can see there FRP plus 1/3 earlier on. It's tracking along okay. Friday's candle's not ideal, but again, broken record here, moderate within the context of everything else. Happily maintaining an FRP, obviously not adding risk on this one just at this stage with that last supply side candle, but next white candle high close could add some more on it quite happily. So it's just a matter of just following the model through on this one for you there, Adonis. Let's go to Perry's US stocks now. PINS, okay, pins. Let me go PINS. Pinterest, okay, well that looks, bang, there you go. Happy with that. 2 big white candles, taking out a very moderate point of supply. So we've seen a couple of points of supply, particularly that one on Crowdstrike, that they're like A-shapes, A-shape, big black candle, big black candle. Those things frighten me, right? Here we've got a very moderate point of supply, and then we've got 2 big white candles, bouncing off the short-term trend ribbon, long-term trend ribbon's up. It's all hunky-dory. Big gap here, big gap. Nice candle here. I love to buy gaps. And it looks great. The only thing I need to do is look out the corner of my eye, and by the practical application, that is the weekly chart. We're actually breaking through this little level here. There's potentially a little level through here and here. I'm not too fussed about it. It looks about it's $50, but I could have a crack here. I could add some risk here and see how we go on this one quite happily, because getting it at 44.20-ish with a stop down here, even if it's below 40, I think we've $4 into that round number is fine. We're going to make one-to-one on this quite comfortably, I'd say. And therefore it deserves the risk, so let me write that on there. And go FRP plus 1/3, 1/63. I will correct that one and go save. It's getting late. You always know when it's after 8 o'clock local time. God knows what it is your time. Let's go to Perry's second one, VRSK. Verisk Analytics, which looks just as good as the last one. It's a little bit more extended, but that's okay too. And I'm guessing if I look out here, it's all blue sky. It's perfection. So happily FRP. FRP plus 1/3. Obviously, if everything we talked about at the start of this session, checks out with your portfolio management model, keep that in mind. And VLN for a turnaround play, says Perry. Valens Semiconductor. Oh, I like this one. I like this one. This looks really neat. That's a textbook turnaround play, isn't it? Really, that's your entry day there, I think. That's the one where you get in, and then, at almost adding a third there, that little upper shadow, but I wouldn't complain if you did. And adding a third on Friday, which means, you're adding a third tonight. So that looks excellent. I just want to have a look out the side here and see because it's a turnaround play, we definitely will have something to do with. We're actually sort of through this zone here, aren't we, with the close. So there's really nothing until we kind of get up here, 433, and therefore, I think we've got a fair whack of upside. Certainly enough to make one-to-one. $5 is miles away, but it's not our first rodeo at $5 either. So no complaints at all on this one. This is a very strong turnaround setup in the interest of sort of mixing up those setups. And hopefully, Perry, you've sort of discovered that, and you've getting used to this idea of seeing how sometimes the turnarounds tend to do better when the continuation plays might not be doing as well, and vice versa. They have their own little sort of characteristics and quirks about them, and that's why you want to have a bit of a mix going. But very happy with that one, and that might actually be the end of it. I do have one from Roscoe. He'll kill me if I don't do this. UNL, which I wonder. I'd say it's 12-month now, okay, because he asked me about, yes, okay, so he's looking for a way on the stock market to play that natural gas trade. And funnily enough, I think there are a few people that are thinking the same way, because I think you could call this a derivative product. It's obviously an ETF, exchange traded fund, which would trade derivatives on natural gas. You can see how this is looking better than the actual natural gas contract itself, which that shouldn't be the case. But it's because there's some traders getting involved, punting that it's going to break out this time. But refer obviously to my comments earlier, Roscoe, if you're watching the recording, to natural gas, where I did say, yeah, look, I think you can put some skin in the game, an exploratory trade, and if this is the way you're going to do it, then no complaints here. Obviously, it's pointless doing technical analysis on this chart because it's a reflection of the natural gas chart. Okay, and that is an important thing for you to understand. Don't bother doing technical analysis on ETFs, which are effectively derivatives on other things. But I did ask you a question earlier on about who did those exploratory trades, and I might not have got the name right because it's been many, many years since I've read the book, but it was Jesse Livermore. So you might want to read. He wrote a couple of books himself, which are worth reading. I can't remember the names of them, but there obviously was the book that was written about him, Reminiscences of a Stock Operator, which you really should read that one, by Edwin Lefevre, Lefevre, and it was written, I think, in the 1920s or 1930s or thereabouts, but it is a compulsory reading for you. And that was Jesse Livermore's one of the first great traders. He did end up killing himself. I'm trying to make light of this. He did. The market got to him at the end of the day, I used him as a model in many ways to try and moderate some of my own silly things that I was doing, because I can be honest with you, there were times where I felt I was being driven mad by the markets. Not that I would have gone to that extent, but certainly to read about how his mind functioned through some of the most incredible bull and bear markets of the early 20th century. It's worth reading. So that's Carl's book club for Monday night, and it is my my presentation done. So let's head over to the PowerPoint, which obviously has the disclaimer, says that everything we've discussed today is general in nature, has not taken into account your personal financial objectives, situation, particular needs, all that sort of stuff. Do that and consult the help of a financial professional if you need to. Remember that markets are risky. You could lose money. Okay, don't trade if you don't want to lose money, and it's always you that's responsible for the stuff you do, the silly stuff you do, not me. On that note, it's been an absolute pleasure chatting with you this evening. If you're having a tough time, there's my son in the corner. He's decided to actually listen in on these now because I guess he's going to learn this stuff at some stage. But if you're having a tough time in the markets, hang in there, and I'll catch up with you next time. All the best for your trading. Till catch up again. Bye bye for now.